Good morning, everyone. How's everybody doing? Well, hello, on. Yeah, it's a good thing he did, AO. Wasn't really looking for World War III, you know? So, yeah, there you go, Raj. Uh, hey, look, I'll take this gap up. I'll take this gap up. I don't mind. This is the last thing we need is another war. I'm sure the oil traders are a little pissed, but hey, can't have everything, right? Let's go take a look at, see what's shaking this evening or this morning, wherever we find you. Welcome, everybody. I'm JJ. This is tradingsyndicate.org. This is where we teach real people how to make real money and use real risk management. And speaking of which, let me see. Check my old email here and see if we have. They haven't lowered margins yet, have they? No. So they've got the small firms are still cooking full margin. So what? 26 grand to trade a mini? Yeah, it's maintenance margin. So 2,600 bucks to trade a micro and $26,000 to trade a mini. You want to trade NASDAQ, it's 40 grand. Full margin, full pull, which makes sense. We are up, what, 175 points? And I'm looking at these levels on the old daily chart here that I did. Oh man, these levels are old levels. And that 68.37 half worked pretty good. 38 was our high, so off 2 ticks. So beautiful thing about inventory, folks, is you can see what's inventory. Once you build a balance zone, and the balance zone for this was way back at 51.64 to 52, and this is the seriously, if large traders, if you had a couple of $100 million to play with, that look below and fail, going long that 64.87. Let's be normal. Let's say you were long over 6,500 up. I mean, I don't know a lot of people who would have taken that trade, maybe our buddy RX and those kind of people. Even 6,500 to 66.21 is quite profitable. So we're back here, and we still have, right, above 87, so above 68.37. So that's all of this is trapped long inventory. Do we push past 68.37? Let's see, right? Anything can happen at night because there's less players around. Let's go take a look at our market profile. Uh, our overnight lows here, yesterday's highs here, our overnight inventory is probably around 99% long. Oh, sure. Inventory is trapped over 68.37. Or trapped long or short, trade maker? 66. Yeah, 66.97. See, if you look at this, all the short-term inventory is underneath us, right? So this is 66.97. So all the inventory is underneath us, and we are in distribution now. So anyone who's short under 66.97 is trapped. Does that make sense? So here I'll draw a line. There's 66.97. There's all of that inventory from the liquidation. Thank you for bringing that up. All right. So this is the position, right? Now, if you guys are unfamiliar with position, I'll tell you a little story about the penguin while we're watching this market. I've got some levels here. Let's see. Obviously, I was sleeping when the big moves happened. I tried to wake up for 1 in the morning, but body just wasn't having it. Hey, Cisco, hello. So we've got big move up here. Uh, all of this is our inventory underneath us. You know, I was looking for this if he decided to blow the world up. And obviously he took a 2-week delay, which is good. And so we have this rocket motion straight up. Shorts are trapped all over the bloody place here, but really anyone who's short under 66.97 went to cover last night, and that's what caused this huge move up. We have a P-shape profile, right? It's not the most beautiful P, but that is a P. What I'll be looking for the larger, excuse me, the larger traders today is, do we stay over 67.88? That's a big level. On the top, we're looking at 68.54 using these levels. Overnight highs up here, and it's just pure distribution. The overnight point of control is down here at 68.04. Let's see if they can move that up. It's good. I told you it was going to be an interesting week. So here we are. That overnight point of control is what? 2,315 contracts. So they're going to probably move that up here and move those off. If you're looking for a short, I did a balance when I woke up. I woke up early, did this balance, and then went back to sleep. So it's 6,800 to 6,809 half. Double it to 28 and a half, and that's where the bid was found just now. Bing, there it is. Topping out at the 38s. We're just distributing over here. So let's see. What we can do. You know, we do, same old routine. Just mark off where our sellers are. The beautiful thing about electronic trading is it's so precise. Look at that. 28 and a half working very nicely on that look below and fail. So now we just wait for a trade, right? We do the same thing every day. So people who are joining us on YouTube, what we do at the Trading Syndicate is we teach you to have the discipline to do the same thing every day. Markets are always the same. They never really change, right? If you want to learn, you can come and sign up into our classroom here. It's free, right? And today at 11 o'clock Eastern Time, I'm not 100% with the health yet, but I still want to do a session because I've been away last week. We're going to do an execution lab / how to trade these volatile markets, okay? And a lot of it's going to be, my usual, waiting for the trade, blah, 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 blah. But we need to keep people, I figure we need to do these weekly to remind people not to lose their heads. The news cycle hopefully is like nice and quiet now for the next 2 weeks. Hey, John. We'll It'll be recorded, so anyone who's in the room, if you want to join the room, it's free for 3 days. Come in, check it out. If you decide to stay, we're only going to charge you 19 bucks. And I promise you, for $19, you will learn more in a month with me than you will 10 years anywhere else. And that'll be information you can actually use to make money. So it'll be actionable information, not like this is a theory. What I teach is based on 34 years of taking other people's money, um, which is basically what I've done. Um, that's what we do here. We're in distribution here. They stopped selling around 28. They're selling into this up here in the 34s. Anyone who's looking at this and who's wondering what the hell are these charts with the letters, these are what we call a market profile or a TPO chart. And all it is basically it's a half-hour candle chart where you can split the candles and you can see exactly where, you know, they're selling and where they stop selling. That's really where all a chart is telling you, right? Chart's telling you here's the candles. You know, they sell into it just under 34 here, right? And they stop selling where they see bids are here. So here's the bid, here's the ask, right? And they let you guys bang around in between. Does that make sense to you guys? You guys are banging around in between. What we'll do is we'll sell it to you, right? Say, for example, in that half-hour candle, right? We will buy 28, 29, 30, 31. Once we get over 31, we'll flip to the offer and we'll sell 31, 32, 33, 34. That's what wholesalers do, right? And you're like, JJ, how can you make money doing that? Well, you got to think if you're trading thousands of contracts, right? If you're trading thousands of contracts, you know, you're buying hundreds here and you're selling hundreds here. You don't need a lot of, you know, movement. Do you see upper gaps hit here? 67.60 and 68.10. Oh, you know what, Phil? I don't have those marked. I should go back and take a look. Right? So these charts, for people who are new, basically a market profile chart is just a fancy half-hour candle chart. So this is a half-hour candle. This is the previous half-hour candle. It tells you where the candle opened, right? Tells you where the candle closed. It tells you where the volume is in that candle, right? You can even get more granular than that and go and look at what trades on the bid and the offer, but that's a waste of time. You don't really need that. All you need to see is, look, if you had a seller at 34 and you saw some sucker coming in who's willing to pay 35, 36, you'll raise your price. Fill them, and then when those suckers are gone, you will lower price again. See? Right? I'll have to take a look at that chart. Phil, can you remind me of that? Are you going to be around in RTH? Wait, could you DM me that in the room so I don't forget? 67.60 and 68.10. Just DM me those levels, or if anybody else has gaps, because we did have some gaps to the downside. That'd be great. I wasn't expecting this move up over 6,800. London's going to open in 12 minutes. Let's see what happens. Thanks, Phil. I'm going to have to go clean up my charts. Let's take a look at NQ. NQ's coming up to that 25,283.50. That would be interesting to see a print there. What else we got going on? Thanks, Phil. Still got that seller at 34, 33. This kind of stuff is hard to trade. I like trading at an edge because you know when the sell orders are done. I really, this would have been a great trade here. The look below and the fail to look below. What do you mean? What do you mean by that, JJ? You mean you're going long here, you got a place to put your stop, so you're long, stop, and then you sell into this strength. And even though it's a 170 point range, you're not going to catch a whole 170 points on these days. Hey, Badir, good to see you, brother. You know, Still, if you could clip 3 to 5 points on 3 to 5 contracts, it's not bad money. You know, it's not the end of the world, right? Yeah, nobody knew which way it was going to go, right? Nobody knew which way it was going to go. You know, um, and anybody who said they did, good for them. You know, if you knew which way you were going to go and you bought 1,000 contracts down at 67.40, good for you, Jack, as John Lovitz would say, right? But you got to have capital to buy 100 contracts and hold them and trade them out, right? Even on cheap margin, right? Or 1,000. Thanks, Phil. Let's see. So we can see that there are bids down here. Trading today is going to be interesting. Be a very interesting RTH. And, if you take a quick look, the order book is thin, my friends. It is a thin order book, you know. You can see the order book is thin, 13, 20, 20. There's 20s and 13s. It's two digits on both sides, so there's not a lot going on here. Big orders will move the market. Yeah, I mean, hey, look, that's the beautiful thing about a 23-hour trading day, right, Phil? You don't, you don't have to trade the volatility. You can trade when it makes sense for you. That's, that's the big thing, right? Let's see. It's my first day drinking coffee after almost a week and a half. So very thankful for that. Hopefully it helps. Makes me a little smarter than the average bear this morning. So you're wondering why I'm not trading because there's no trade to be taken. I don't see an edge just yet. I know that there's a seller right here at 33 and 3/4. I know they let it breathe for 3 minutes up to 35. They're back, right? Selling the 33s, right? So, you know, if I split that profile out, who would buy up here? Oh, lots of people, Phil. That's the good thing. We got shorts who are covering, right? You have people who shorted it, who tried to cover early, people who added and are covering, people who added, covered, shorted again, covered, shorted again. You know the type. Then you have the longs, right? The people who chase price, right? I got to get in because it's going to go to 6,900, right? There's all sorts, right? You know, that's the beautiful thing about markets, Phil. Because, you know, every kind of people, as Robert Palmer would say, in the great words of the musician Robert Palmer, every kind of people. It takes all kinds, right? There's always somebody who's got an idea. See, that's the beautiful thing about markets. There's always somebody who's got a bright idea, right? And is willing to put capital or somebody else's money at risk. That's the beautiful thing. That's how we make money because all of those different opinions translate into orders, right? You know, like some guy might be sitting there going, you know what? I'm going to put $10 million into a short here. Somebody might be, I'm going to put $4 million into a long, right? It's a beautiful thing. Somebody has a bright idea. They convince somebody else to give them money to back that bright idea. And that is how order flow is created, right? Now, where I come from, order flow is created because we create order flow to sell a product, right? Just like, you know, you came up with Count Chocula or Frosted Flakes. You create an advertising campaign to get people to buy your cereal. Well, we create advertising campaigns to get you to buy our stock, right? Look at SpaceX. It is probably the most highly anticipated IPO since Alibaba. I still remember when Alibaba went public, it traded 1 million trades in a day, which was something unbelievable. Nobody thought it brought so much retail in. And it wasn't even, you're not even buying Alibaba. You're buying a company based out of the Cayman Islands or something like that that has a revenue sharing agreement with the Chinese company, right? And people just came running in to buy it, right? So that's the beautiful thing about markets. You sell, get everybody all excited, they come in and start buying, and it's a beautiful thing. And you get to sell. So here you could clearly see they sold most of the product in this half hour up here over 32. Now they had to put it on sale, and they're selling it down to 30. Now, where do we find the bid? Right, so when London opens in 3 minutes, do we take out this K low? That's what I'm thinking. What do you think? Right, and this is how I look at a market. I know there's sellers here, and I know they stop selling here. The reason why they stop selling is there are people who are willing to pay 28, 29, and the bids are all sitting here, right? They can see these bids. How can they see these bids? Because when they come down here, right, they tap those bids. You guys ever... I'm going to go back a little bit. While we're waiting, this chop, do you guys want to know how this really works? I'll tell you how this stuff is programmed. I don't know how the programming works, but I know the business. So say I'm a seller and I'm selling tap, 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 and I get down here, right? Down to 68.30. And I go to sell 100 contracts. And there's a bid there at 68.30. If I sell 100 contracts to that bid and that bid takes it, right? They buy the 100 and the bid stays there, I'll raise price. Do you guys understand what I mean? So if I get down to 68.30 and I'm selling 100 contracts at every tick, right? And I get down to 68.30, and if I hit the 61s, they buy it and drop and buy it and drop, right? But if I get down to 68.30 and they take it and stay, then I know that there's size underneath. You guys awake? I know most of you have been up all night. Do you understand what I'm saying? If they take that bid and stay, you found the bid, baby, and then you walk away from that bid. You pull the offer up. You see how the offer came down to 68.30, and now we're 32.5 offered, right? They're asking for more. Exactly. Right? And that, if you can program that, and they have obviously, right? So the old days you'd be doing it on the phones. You'd be like, hit Knight for for 100, hit Citadel for 200. They took it and stayed, or they took it and dropped. If they take it and drop, then you know you have to lower your price. If they take it and stay, you raise your price. This is done so quickly, right? It's done so quickly with electronic trading. It's so efficient. That's why you have sellers that always go to the same place, and then you have bids here. Let's see what happens now in 39 seconds when the next half-hour candle opens. These markets are beautifully constructed. See, look, those 30 bids, they're dropping, right? They're dropping the bid. They see size coming, they drop the bid, they drop the bid, right? Now, do we take out 68.28 in 10 seconds? Watch. Okay? See how it took out the bid? Now we're going to find the bid, right? Where they find the large buyers, they'll lift the offer. If they don't find large buyers, they'll come down here to 68.25. See? It's beautiful. So now if you're looking for a short, I'd wait another 28 seconds and see if we stay under 28 and a half. Because if we do and we take out that 25, we're going to come down into this 19 area. Boom. See how we went there to the tick, baby. Look at that. Found the bid, lifted the offer. Now let's see who comes into the grocery store. Here we go. Watch. Because everybody wants a short right now. It's up. It's got to be up. It's too high. Blah, 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 blah. Right? So say you want to take a test short and you're putting some orders out in the 26s, right? So I shorted one at 26 and a quarter. I'm offered 26 half. I've got covers in at 27 and 28, 27 3/4, 28. I'm going to go put in a bid at 24 and 3/4 and see if I can get a little taste. I'm short 26 quarter and I'm filled at 24 quarter, right? Just on one little micro, right? But that's the short, right? That candle opens, the top of that candle gets nowhere up near 28, so I shorted 26, right? I had a 27 offer, but it didn't get taken, right? But there you go, right? This is the typical London inventory correction, right? That's a typical inventory correction. You've got people trapped long here, right? They're all trapped here, and they are now puking out. Your target will be just here, right? That's the last little position before the move up. You guys see that? If you use candle charts intelligently in a practical manner, You'll save yourself a lot of time and a lot of energy. So if you are short 26, 27, there, look, you're looking for bids in the 22s. Look how it comes down and it hesitates, right? There will be bids here. Let's see how strong those bids are. Because if there are large bids here, the offer will lift and the sellers will re-engage at 26 and at 27 and a half. Do you guys understand that? We'll be talking about this in the execution class today. This is practical information that you can use if you are trading. It helps you manage your expectations. It helps you manage your focus. Look at that. I'll color that blue for the bid. It's not really, you can't even see it, can you? Let's go yellow. There, you can see it. See how they stopped? I told you guys, right? I told you if you're short 26, 27, this is a look above and fail of 28 half, right? So if you're short, I said bid 22, 22 half, you should be covering. Look, they're covering there. They're going to come and tack that little yellow line. Look at the size. Do you see the size? That's short covering. That's short covering. Now, if those short sellers see the candles, they have all the same bottom. If those short sellers see a big seller, they're going to drop their price and they're going to come down to this area here where they were trapped underneath 1819. Right? This is how you use candles in an intelligent way. You don't have to memorize patterns. You don't have to worry about wicks, twicks, and bwicks. You don't have to worry about any kind of BS because it's so plain, it's so simple, it's so clear. There's your 22 print. So if you were short 26 like I was, and you covered 23, 22, you make 3-4 points on 3 to 5 contracts. I just did one contract because I'm half asleep and taking a test trade. But if you're dialed in, right, you short 26, stop 28. Look at the bids come in. Now, do you think they're going to sell into it at 26? I would if I had product, right? I'd be waiting there, right? Just waiting, right? There's 26. There's the seller. What'd I tell you? Next seller will be here. See how simple it is? Seller's at the top of the candle. Seller's always at the top of the candle, my friends. How do I know that? Because I was the top of the candle for 20 years. You split the profile, you can see it. There's the short covering volume, right? So what happens? The short sellers come in. Wholesale builds a little position. So here's where the shorts come in. Wholesale, this is the shorts. This is wholesale longs. We come in. Now, if the people who shorted under 25 are trapped, we'll pop this thing back up to 28 and a half. How do you trade that? Well, you go long 24, stop 23, sell 27, 28. Right? You can't make it any more simple than that. Boom, there's your 26 and 3/4 seller. Right? Like clockwork, we stopped at 26 and 3/4. Hey, Jerry. How you doing, man? Long time no see. Hope you are well, brother. Good to see you. It's a business, my friend. Well done, Howard. Well done. So if we see more people lining up to buy, that software will sense the order flow, start lifting offers to 27 quarter, half, 3/4, 28, 28 half, and scale them, right? How do you know if your trade's working? You put your orders out. If your orders get filled, your trade's working. If your orders don't get filled, guess what? Your trade's not working and you need to adapt. Well, why don't you, Jerry, give me a DM. We'll have a call. Well, you've got my phone number, right, Jerry? I'm still a little sick, but you know, we'll have a call. I still, I want to start doing calls again, but my girlfriend freaked out when I told her and said, wait till tomorrow. She wants me to take another week off of coaching, but I feel guilty. Yeah, brother, don't worry. I'm always here. See how that seller's still there? There's size, right? You gotta sell some size. And back down. Let's see if that 22 bid is still there. See the rotation? Now, if we have a size seller, we'll break through 22 like a hot knife through butter. And we'll drop down, and the next bids will be down here. See? So the bid's still there at 22. The offer will be there at 27. Do you guys find this helpful? Right? Now, not all of it is tradable, right? The hard thing is, especially after a big news event, it's, but if you want to practice, you can flip, you buy 22, 23, stick what you do is you go long here, you put your stop here, and you know there's going to be a seller here, so you sell before them, right? So you buy 23, you sell 25, right? And you can play around like that on the sim until you get your execution right. Then you use those funded accounts, right? You use those funded accounts to, practice on. You get good at it, right? It's just like anything else, right? I mean, you want to look like Arnold Schwarzenegger at the Mr. Olympia. It's not going to be a month. You're going to have to spend years training. The A plus setup here, Rocky, is when we get back up over 28. You're going to go long 28 because the position's going to be underneath you. Long 28 half, 29, stop 28, sell into the 32s. That's the look below and fail, traditional, right? I'm just breaking it down to show traders right now where the bids and the offers are. So Rocky, I would, if you want, come into our room for 3 days. It's free. You got nothing to lose. Come into our room. We got an execution class today at 11 a.m. if you're interested, 11 a.m. Eastern Time. It will be recorded for those of you. Can you get a liquidity injection to be like Arnold? We'll ask the next Fed chairman. When is the next Fed chairman coming out? I want a Fed chairman that smokes when he gives his testimony. You know, like Volcker. Volcker used to smoke those big cigars. I don't take a Fed chairman seriously unless they're a smoker, right? What was my win? I'm about 60%, David. 60. I think it was last time I checked the stats, it was about 66. I win more than I lose because I'm cheap as, excuse my language, I am cheap as fuck. So all my trades have an out. What I do is I have a very specific time to trade, and that's when it hits my business to the T. When it does this is my favorite trade. I'll show you, right? When it does the look below and fail, I go long. I have a place to put my stop. And then if I get stopped out, the amount I lose is very minimal because I have a very, very tight risk management system, which is based on market structure, which most traders don't even talk about market structure because they don't know anything about market structure because they've never created a market. So, and it took me years to figure this out because most people are like, I'm going to take this trade. It's 2-to-1, 3-to-1. That's great. But where does the trade make sense? So if I'm going long, hear me out. If I'm going long at 29, hoping to sell 31, 32, 33, and somebody puts it on sale at 28, then the inventory I own at 29 is not priced correctly. I must lose my inventory to get my cash back, right? So when you talk it through, your trades make sense from a business standpoint. David, you with me? And I don't take a lot of trades, right? I don't take a lot of trades. I usually do 3 to 5 trades and I'm done. So I'm not like these degenerate gamblers who sit in a casino and go, oh, it's house money, and then they give it all back and then more, right? I like to make a little bit. Oh yeah, I will definitely close my trade before my original stop loss. If I see if it's not working, I'm gone. I am gone. And I learned that from being a penny stock manipulator, that you don't hang around and hope and wish and pray. As soon as something doesn't make sense, you get the F out of Dodge, right? I'll tell you a story. that'll illustrate this. When I was young, I was working the door of a nightclub and I met this beautiful girl, stunning, right? We went on a date. Everything was great. I was surprised she even said yes when I asked her out because she was just gorgeous. And we went to a David Lynch movie, which was kind of creepy. But went back to her place. Sitting on the couch, I put my hand behind the pillow, and there was a freaking huge knife. You never saw me run so fast in your life. I was gone. She went to the bathroom. I ran for my life. That is the same trade in a is same thing in a trade, right? As soon as your trade something doesn't make sense, you have to have the spider sense to get out quickly. Capital preservation, if it goes in the other direction in 3 or 4 minutes and works, who cares? See, the thing is, we as retail traders, we don't have the luxury to be wrong for a large period of time. Do you understand what I'm saying? Right? We don't have the luxury to go, oh, I can be wrong for half an hour and be down 5 grand or 10 grand. Right? So as soon as something doesn't make sense, you have to get out of that situation. Right? Whether it's a knife behind the couch, right? Or it starts taking out an offering lower, right? So say, for example, you were going long 22 here. You know there's a bid here. So your stop loss is here, right? So you're not going to lose a lot. If you take this trade and you go long 23 and your stop is under 22, your risk isn't that much. And you're going to be selling at 26, 25 because you know that there's sellers here, right? Very simple. Right? And all you have to do is practice that execution 1,000 times to where you'll get so good at it that as soon as you get into a trade, you'll be like, you'll hear me go, oh crap, I'm too early, and I'm out. As soon as you realize that something is not right, you're out, you're out, you're out, you're out. You should be getting out of bad trades very quickly. You don't give it, do you have the money to give it room to breathe? Do you have the capital, right? Do you have the capital to back your conviction? And have you taken that trade 1,000 times that you know, okay, I'm going to give it room to breathe, it's going to work or it's not going to work? That comes from experience. And I'll tell you something. Every time I give a trade some room to breathe, it doesn't end well. That's like in those movies when they shoot the guy, the bad guy, and he goes down, but they don't finish him off. He always gets up and tries to kill you again. Same thing with a bad trade. Don't give it room to breathe, right? Unless you're trading with a lot of money, and if you're trading with, $5 million, right? If you're trading with $5 million, you can maybe have a 5 grand loss on a day, right? But if you're trading a $2,500 account, what? Right? If you're trading a small account, why would you give it room to breathe? Either the trade works quickly or it doesn't work. You don't have the luxury to give it room to breathe. You're in a cash account. What's your strategy pre-market? You trading equities in a cash account? Tobacco trader? There. Now the position is underneath us. You can see the position. Okay? So equities. Right? So do you get succumb to the gap and trap when you're in the pre-market? I would always advise pre-market traders to let the market open and you find where the bid is before you go in. I don't like trading pre-market as a retail trader because the pre-market is when the wholesale guys like me are manipulating guys like you to come in so we can sucker you in on a gap and trap, right? It's just like an IPO. When they IPO a stock, everyone runs in, the price goes up, the insiders sell. It's the same thing in the pre-market. The pre-market is to get people excited, right? So now let's see if we take a little long here. Oh crap, I don't have my DOM up. Ah, right? So if we're buying 29 and 3/4, 30, right? We put our stop at 28 and a quarter, put some sell orders out at 31, right? And we're out, right? Quick little trade. And I was slow. I didn't have my DOM up. But that's what I meant, right? This is the trade where you want to be buying 29.30, selling 31.32. You know there's going to be a seller here, right? Equity trading is different than ES trading in the fact that there's a couple of things happening. One is when you're buying a stock at $5, there's some bastard like me who's selling the stock on behalf of people who own it at 0.001 cent. Okay? So they will have me come in, cut the sell, and bring in the buying, right? And we'll get you guys all hyped up. You guys come rushing in on the open, boom, we fill you, right? So unless you're a very fast trader, that's why equity traders use hotkeys and all that stuff, right? I would wait, let the market open. Right? Let the market open. Let it let the let them gap people, trap them, then find the bid, then take the trade. See, look at that. We hit that 33 seller to the tick. And now you got to be even quicker because the algos are so fast, right? Nice work, Howard. Nice work. Yeah. Yeah. You could tape that dip on the open once you find the bid. That's pretty much it. Now you know where the sellers are. Now you know where the bids are. If we liquidate again, you'll look for bids here because there's a position here. Remember just how we found the position here? There's a position here now. So on liquidation, right? I'm very straight to the point. I'm an old man, Tobacco. Come into the room. Give us a try for 3 days. It's free. You got nothing to lose. And listen, if we ding you, it's 19 bucks, right? If you hate it, worst case scenario, you saved yourself a trip to McDonald's. I don't even know if you can get McDonald's for 19 bucks. But I promise you, if you come into the room, DM me, we'll have a chat, and we have a ton of people who trade equities, and I'm thinking of downloading or resubscribing to my equity software again, do some, but I don't want to get ahead of myself. We'll do some equity classes. I've got levels for equities. Everything is very straightforward. The trades got to make sense, right? If the trades don't make sense, they don't get your money. You got to be a snob with your money, right? It's just like I say, when you go and pitch a billionaire on a startup, they look at you like you've got some disease. You should be the same with your money when it comes to taking trades. Prove to me that this trade is worth taking, right? Now we're going to liquidate back down. Let's see if we hold the bid at 27 or 26 and 3/4. There's the 27 bid. Let's see, watch this next candle, right? If the trade doesn't make sense, they don't get your money. See that 26 bid, 26 and 3/4 bid, it didn't hold. That means the short sellers who were buyers here saw a little bit of size and they dropped their buy orders. Now let's see if we come back up over it. Expect this kind of back and forth while the market finds its way today, right? And that's it for me, folks. Hey, I lasted a whole hour today. That's good. Feeling stronger. Great. If you have any questions, DM me. I'm vwaptrader1 on X. The room is the tradingsyndicate.org. We have this free university thing where you can come in and learn for free. And, there's no BS. Everything's really simple in our room, right? Here's the reason why you take the trade. Here's where it doesn't work. And one thing we will teach you, too, is when not to trade. Because learning when not to trade is one of the most important things. Thanks, everyone. We'll see you at 9 a.m. Eastern Time for our next session. Have a wonderful, wonderful morning. Be safe out there. Thank you very much. Appreciate you all. Bye for now.